Well, among global cues, largely the focus was on how the US inflation numbers came out, and they came out much better than anticipated. We were expecting that US inflation number to come in at 8.7%. It came down to 8.5%. Of course, 8.5% is elevated nonetheless, but it's a much improved number from what economists as well as the market was anticipating. And the way they were penciling it in was that the 8.7% number would lead the Fed to push rates higher. Now, of course, that lower number means inflation is coming off. The Fed rate hikes seem to be working to a certain extent, and that will mean that going forward, the Fed will reassess as to what to prioritize. Of course, this is one of the two inflation numbers which the Fed will look at in its meeting at the end of September. So keep your eyes out on, of course, the August inflation number, which is a month from now. But for now, let's focus on the reaction to this particular number. Now, the core inflation too came in at 5.9%. Of course, that excludes food and energy, and that means that the 6.1% expected core has come in lower as well. And that's where really it's been a bit of a bonus, and that's why markets saw a risk on play, if I may use that term. So we saw the Dow gaining up around 1.63%, the S&P 500 also gained around 2.1%, and the Nasdaq rose 2.9%. So clearly we're seeing gains across the board. Even in Europe, we did see some gains, 1% plus gains for pretty much most European indices, major European indices as well. When I'm looking at the Asia Open in early trade today, we're seeing pretty much gains across the board. We are seeing the Shanghai up. We are seeing the Hang Seng up as well, over 1%. We're seeing gains in the Kospi 1.4% higher, and the ASX 200 also nearly 1% higher. We're also seeing the SGX Nifty rise over 1% in trades. We're expecting a 17,700 plus start on the Nifty, at least in early trade today. So seeing good cues globally, a good push due to this inflation number that came out. Now, in terms of the commodity prices, oil has come off from those highs, of course, and now very close to that $90 a barrel mark. In fact, it was at $90 a barrel mark yesterday. It's now currently just below that $92 a barrel mark, with Brent just above $97 a barrel. Gold, though, has come off. Of course, the risk on play playing against gold. So gold has come, but it's holding up well above that $1,800 an ounce mark. So we're seeing gold hold up quite smartly despite that lower inflation number that's come through. We're also looking at bond yields. Bond yields came off those highs. Above that 2.82% is where bond yields were at the start of this week. We've now though seen them come off. They've come towards that 2.7% mark, and now they've risen up again over the last 12 hours or so. It's come back towards that 2.8%, but still below that 2.8% mark. That's where the 10-year US bond yield is currently at. In terms, lastly, of the dollar index retreated quite sharply from that 106 to 106.5, where it was hovering at the start of this week. It's come down to 105. So clearly the dollar index coming under pressure. That's one of the reasons as well that we saw a small spike in oil prices, but not very meaningful, but we did see that nonetheless. And lastly, on to cryptos, the risk on trade has played very well for cryptos. In fact, Bitcoin up 5% even as we speak, 5+%, and even all the altcoins looking higher. In fact, Ethereum 10+% higher in trade today, and we're seeing Bitcoin above that $24,000 mark. Largely, we're looking at positive cues. We also heard from the Fed, one of the members of the Federal Reserve, Mr. Evans, and he spoke about how even though inflation has come in at 8.7, it's still unacceptably 8.5. It's still unacceptably high, and he is expecting that rates will go towards the 3.25 to 3.5% mark by the end of this calendar year, and 3.75 to 4% by the end of 2023 calendar year. So we are expecting to see rate hikes, but in a more normalized fashion is what he is penciling in or anticipating. He's also anticipating CPI in a good case scenario to trend at 2.5%. Core CPI is what he spoke about, trending at 2.5% in 2023. So that's a good case scenario again. So we are looking at a lot of positives coming through, and that's what's going to aid markets, at least in trade today. So global cues largely positive on the back of that.